Welcome, my dear students, ladies and gentlemen. This video is in particular about ACCA's Advanced Performance Management, especially pertaining to the syllabus update and the upcoming sessions of September 2022, December 2022, March and June 2023. Now, as you know, ACCA's APM Writing Coaching with AZB is the particular service that I provide with regards to ACCA's Advanced Performance Management candidates, because what I mainly focus on has been the writing aspect. In particular, when you think about the ACCA syllabus, it's not necessarily especially when you look at the content of the P5 syllabus, it's not something that is difficult to digest, is it? However, it is the exam within the ACCA's 14 exams that has the least pass rate. And this is why I have, for the past couple of years, continuously focused on training candidates, coaching candidates on the writing skill, because that is where the biggest problem has always existed. Now, I wanted to create a video series on APM updating matters because, as you know, if you are a candidate who's working on ACCA's APM, you know that the syllabus has been updated significantly. There are new sections, a couple of new sections that have been embedded. So what I'm going to do is I'm going to look at it from a foundational aspect, because without that foundation, without the right kind of approach, without the right kind of understanding about ACCA's APM, about the whole point of the subject, students generally find it very difficult to logically and constructively approach questions, because in most cases these questions seem very practical. But why do students continuously face challenges, face problems in answering these questions? That's what we are going to tackle section by section. But before that, just a gentle reminder, if you're someone who needs writing coaching, writing training for ACCA's APM, you can definitely use the link in the description, fill out the registration form, at which point, once we get the submission, you will receive the instructions email with everything on how to proceed. Okay, on that note, let's get started. In this particular video, what I want to do is I want to particularly look at let's see. All right, there we go. A different approach. I'm going to use a different approach, which is essentially looking at the syllabus guide. This is where everything starts. And one of the biggest problems that most, I suppose, tuition providers and teachers, and this is something that I took into due consideration, because I have to admit, even during the initial years of my teaching of ACCA's APM with several institutes, this was about 7-8 years ago, my main focus was delivering the content. And some of the videos are on YouTube. There are entire revisions on YouTube which you can check. They're very constructive, they're very useful. However, there can be, if you don't communicate the idea properly, idea correctly, there can be certain gaps in how the student understands or how the student translates the syllabus outcome that is expected of the student versus the content that is actually there in the syllabus. So I'm going to create a series of videos focusing on the key sections. When you look at the syllabus guide, there are 6 sections: A, B, C, D, E, and F. So I'm hoping to create at least one video. Some of them are quite lengthy, so I might break it into 2, but at least one video pertaining to each syllabus area, broadly with a verbal cue, especially discussing the entire point, the whole point of why and what is being discussed within the syllabus areas. So the first one, section A, is the use of strategic planning and control models to plan and monitor organizational performance. This is section A. And when you look at the essence of that whole argument, it is broken down into 1, 2, 3, 4, 5. what you see here, strategic planning and control, under which you have strategic management accounting, performance hierarchy, performance management and control of the organization, changes in business structure and management accounting, environmental, social, and governance factors. So these are the 5 core areas. Let's briefly look at each one of them. When you think about strategic management accounting, the first thing that should come to your mind is whatever you learn. And as I said, my dear students, what you have to understand is that my objective is not to discuss the core content within the syllabus itself. That is not what I'm going to do. I'm going to give you a broader framework, a broader way of how you should think about the content when you actually learn them. And you might actually be learning them through a self-study method. Maybe you've downloaded the books, maybe you've bought them off Kaplan, maybe you've gone into a tuition provider, or maybe you're either using BPP material. It doesn't matter. My approach here is to tell you how you should take that content and put them into your mind, or add them to the framework in your mind that will help you face the ACCA APM questioner or the examiner in the right approach. Okay, so let's think about it. Now, all of these points that you're seeing here are areas that the examiner wants the candidate to know. So if you think about it, an area like strategic management and accounting, which is the first one, what does it mean? What is the whole point of strategic management accounting? So for this, let me try to explain this. When you say management accounting, it's ideal that you've learned F1 to F9 and you're at the professional level, because if I ask you what is accounting, you have a ready-made answer. It is in simple terms accounting, and there are different terms of accountings. There is cost accounting, there is management accounting, there's financial accounting, there's tax accounting, all kinds of accounting. But it is necessarily the process of converting or communicating and the actual processing of information that makes data useful to a business. So when you have transactions, for example, a business is completely dependent upon its transactions. When you have these transactions, what you do is you use a financial accountant to process these transactions, to convert these transactions, to record these transactions into an understandable format through what we generally call the financial statements, so that you can regulate them, you can monitor them, you can review them, you can analyze them, you can make various predictions off of them. So that's the whole process of accounting. And if you do it in particular regarding costs, you call it cost accounting. If you do it in particular with regards to financial transactions, you call it financial accounting. And in our case, especially in the case of P5, what happens is if you do these kinds of processing of information, useful information, particularly within the scope of managing, you call it management accounting. That's the whole idea. That brings us to the question of what is management, right? Simply, what is management? Generally, management is known to be planning, control, and decision making. Planning, control, and decision making. If you learn, if you try to learn management through a MBA or a different kind of book, advanced books, or a doctorate level, you also see the term organizing as an additional term. But within the Kaplan material for CIMA and ACCA and similar programs, you have planning, control, and decision making as the main 3 components that fall under the concept of management accounting. So if we really think about it, the accounting or the processing of data into information pertaining to what? Planning efforts in your company, pertaining to controlling efforts of your company, and decision-making efforts of your company would be, in simple terms, referred to as management accounting. Now, what exactly is planning? Planning, very simple, you plan ahead. You're trying to not walk into the future without any sort of idea, without any sort of framework, without any sort of background effort, you don't try to blindly walk into the future. You're always trying to walk toward the future with something in your mind, with a goal, with an objective, with a measurement in your mind, with areas of success factors that you might consider critical to your business. So you're trying to walk into the future with a conceptual idea, with an ideology about what your company is and where your company wants to be. And if you think really about control itself, control is essentially the process or your effort that you make in order to manage or to hold or to grab your future and to control it the way you want. And this is extremely difficult. Right? For example, if you take different elements within a company, as a company grows, you add more people, and people have to be controlled. They have to be managed and thereby controlled within certain frameworks, within certain rules and regulations and laws and disciplines, because if they don't behave the way you want them to behave as a leader, for example, then you will lose control. If people who are working for you start doing the things that they want at the time they want, the way they want, you're going to have a business that has completely lost control. And this is not a favorable position to be in. So the process of control is essentially just grabbing and having a grip of what you are looking at, what you want, and what you want to achieve, and trying your best, trying your utmost best to control it, to shape it the way you want. And decision making, obviously, which is the third component, is quite simple, very straightforward. You're trying to make decisions, and almost half of your work, or more than almost, I suppose 90%, 80% of the bulk of a business leader or a manager's work is making decisions on a daily basis, on a hourly basis, on a secondly basis, on a minute by minute basis. As a business leader, you're expected to make decisions and choose between 1 or 2 or 3 yes or no, or right or wrong, or just have to make choices. So all of this falls under management. So the whole point of a management accountant is you get someone in the company, or you call them management accountants, and you give them a plethora of information. You tell them everything you know. You give them everything about this company, and they try to do this planning, controlling and decision-making effort using that information to the best of their ability. And that person, you call them a management accountant. Now, this particular term, the first one, A1, we're going to call it A1, is strategic management accounting. What is that? The concept of strategy is basically hierarchy. And you know that the second one, as you can see here, is performance hierarchy. The idea is at APM, this is not F2, this is not F5. At APM, the examiner basically expects you to be on the top of the ladder. You're expected to be right at the top. You don't worry about minor things. You don't worry about operational matters. You don't worry about management matters. You don't worry about tactical efforts. You don't worry about which marketing campaign is going on and whether it's successful. You don't worry about the salary, rather the dissemination of salaries, and you don't worry about the documentation efforts. You don't worry about the promotional schemes of your business. You don't worry about the minor details of product design, but you do worry about everything at a broader level. You do worry about whether your company is doing the right thing. You do worry about any reputational matters that are happening in your company. You do worry about whether your P&L is hitting your targets. You do worry about whether your people are crossing their lines and making things difficult for the company. You do worry about how the customers are perceiving your business. The basic way to understand it is just put yourself in a company of 2,000 people, and who runs this company? If it's a listed company, the board of directors. Right? So if it's a 2,000 people company, and if it's a company which has 20 floors, Think about yourself as the person who is sitting in the 20th floor with the other directors trying to decide the biggest, the most serious, and the widest in scope matters to your business. So you're basically talking about, in strategic management accounting, you're basically talking about accounting efforts related to planning, controlling, and decision making at the top level, at the board level. So think about it. When you actually learn the content of this chapter, when you go through the first chapter, essentially, you learn the different definitions to planning and controlling, and you learn a bunch of technical stuff which is not difficult to absorb. You have to realize that the purpose of learning all of this, why you're learning all of this, is because you want to take that information and make yourself someone who understands where you are. You're sitting at the top floor with the board of directors, thinking about the widest, most serious, most complicated, most impactful, most influential matters of the business. Now, if you cannot really take that information in your chapter, if you can't take them and use that information in order to do this function, in order to execute strategic level management accounting, you will have failed in understanding the true essence of this particular learning outcome in APM. Is that clear? Then I'd like to move to performance hierarchy, performance management, and control of the organization. All right, to make it easier, if we think about it, here we go. What does the examiner say in terms of the learning outcomes? Performance hierarchy. Discuss how the purpose, structure, and content of a mission statement impacts on performance measurement and management. Discuss how strategic objectives are cascaded down the organization via the formulation of subsidiary performance objectives. Let me go through all of them for now. C. Apply critical success factor analysis in developing performance metrics from business objectives. Identify and discuss the characteristics of operational performance. Discuss the relative significance of planning activities as against controlling activities at different levels in the performance hierarchy. All right. So in essence, what does all this mean? Let me switch to this. Performance hierarchy, when you're thinking about it, you can break it down to the two words, performance and hierarchy. Now, performance is that, now think about it this way. If you're a sole person business, if the business is only you, right? You're a sole proprietor of the business and you're the only person. Let's say you're you have like a tea stall, for example. Now, in a tea stall, you basically have to make sure that the tea is made, right? You have to make sure that all the utensils are clean. You have to make sure that you collect the money, that you give the change, and you safeguard the cashier, right? Let's say it's just a small tea stall. So you're basically having low-end work like cleaning the utensil, which we would generally term as operational matters, and you have high-end work like collecting the cash and managing the cash, because you have to make sure of the supply. Also, you have to make sure that you have the raw materials. You have to go and buy the sugar, the milk, and you have to source the water. So you have to ensure that the supply chain is also working. So you're basically thinking of one person who is performing the seemingly most simplest or the most low-level work like cleaning the utensils, but also the most high-level work like managing the supply chain and ensuring that the required raw materials are there and managing the cash of the business. One person. So this is an example of where a business's performance is at all levels managed across or managed through one person. The entire business hinges on this person's performance. And think about it. If the person, okay, this one person, if he at some point, let's say he's getting more and more customers and he's doing an excellent job, Initially, when he started the business, he only had like 10 customers. And each customer, averaged about 100 rupees per day. So 10 customers, 100 into 10,000 rupees. Let's say that 1,000 was enough for him. Now, and the 10 was the steady flow. So when he cleans the utensils, he has enough time to do it properly. When he has to go to the market and when he has to buy the raw material, he has enough time and he has the resources to ensure that he's getting the best quality, milk, best quality tea powder, best quality, whatever, the masala or the whatever. He has the time and the resources to ensure that he's sourcing the best. He has time to make sure that his stall looks good. But if the volume of the customers, because he's giving a good service, if the volume of the customers are growing, now what will have to happen? Now he's thinking, look, I used to get 10, but now I'm getting 30. I'm getting 30 customers, right? It's a good thing. However, what this has done is it has overall, because I'm the only person working in the business, my cleaning of my utensils, I don't do it as well as I used to do back then. Even though instead of the 1,000, I'm making thrice, I'm making 3,000, the quality of my work has gone down. Now, what is this person thinking? All right, let me hire a boy, right, or a girl, whatever. Let me hire someone let me employ someone, let me give someone a job to clean the utensils and to heat the water, to make sure that the water is always hot, right? That it's always boiling because it's a tea stall, right? So now what has happened is you've added one person and you've given the seemingly easiest and the seemingly lowest level, but not less important. Actually, keeping the utensils clean is one of the most important skills. However, the problem is that it is not a skillful. You don't need accounting knowledge or you didn't need a formal education, for example, to wash or to clean the utensils. As long as you master it and you have the discipline, you have the commitment, you have the, sort of a proper idea of why you are there and what you're doing, you can do it well. So he employs someone for a reasonable wage, let's say 3,000 bucks a day, gives 400 bucks, right? 400 bucks for the person who cleans the utensils and maintains the boiling water. Now what has happened is earlier he used to make 1,000 and the entire 1,000 he used to get for himself. But once he added a person, he's making 3,000, but he gives 400 to this new person. So he has 2,600. Either way, it's a better deal. And he's also making sure, because once you outsource both of that to the employee, now you have enough time to make sure that all the other work is happening in the right manner, that you're giving your best effort, because you have that time is saved. So you have more focus for the other important things. You're making the tea, you're taking care of the supply, the sourcing of the material, and you're managing your cash. Now the business continues to grow. Now what happens is you basically have 100 customers a day. 2 employees, yourself and the cleaner, 100 customers. 100 customers meaning 10,000 bucks. Now you're making 10,000 bucks because you've done well. Your tea is good. But now it's hit a point where the volume is not manageable. Again, you find yourself and the cleaner not enough. So what do? You look in the market and you get someone, let's say, for example, who is really good at making tea, but he doesn't know your secret. So what you do is you get him, you employ him, and you say, I'll give you 1,000 bucks a day. I'll give you 1,000, make the tea. And you slowly train him, right? You slowly train him over a week, 2, 3, 4. You train that person to make the tea really well, to make sure that the tea, what you provided, at the quality you provided initially, is still being given. Now what is happening is that your business is a 3-man team. It has you who used to do the cleaning, but now you're not doing it. You've given it to the cleaner, and the cleaner is taking care of the water. Who used to, you used to make the tea, but now you're doing it. You have like your own chef. You have your own tea maker, and this person is an excellent tea maker. You've trained him as well. He's well disciplined. You're giving a good salary. So maybe you've raised the salary, let's say between the tea maker and the cleaner, you're giving 2,500 bucks. If you have 100 customers, you're making 10,000, out of which 2,500 is going away. So you have 7,500 to manage the rest of the business and to take for yourself. Now it's a three-man team. This business has grown into a three-man team. Initially, you are a sole proprietor. Now it has become a three-man business. Now, where does performance hierarchy come into play here? You see, if the cleaner is taking care of the cleaning and managing the water, and if the tea maker is taking care of the tea, what are you doing? You're taking care of your cash, right? You're the one who's, getting the cash, giving the cash. And this has given you more room because you've actually outsourced two critical but functional matters to two other employees. So what does this help you do? You've actually invested in making your stall a little bigger. You've added a few chairs. So you're expanding slowly, and that's happening. But these are strategic decisions, you see, because these are related to the growth of your business, the expansion of your business. You didn't have a big signboard, but now you've got a digital marketer to market your tea, or you've got a artwork place to do a big board for you, a nice, beautiful, attractive board with lighting to make sure that your shop is visible everywhere. These are strategic matters. So when you think about it, if the cleaner whose performance relates to cleaning and managing the water, if the cleaner fails in his performance, your business is going to be in trouble. If the tea maker is going to, have blunders in his performance, your tea shop is going to have trouble. If you mismanage your cash, if you don't, make sure that the business, it's clean, and you don't make sure that the expansion is going right, you try to reinvest in the wrong place, you try to buy utensils that you don't need, you try to, your communication with your customers, because you're the one who's managing the shop. So if your communication with the customers is not going well, then you're going to have problem. Either way, at all levels, whether it's the lowest level of the cleaner, whether it's the mid level of the tea maker, whether it's the highest level of the owner, if at each level the performance is bad, overall it's going to hit your business negatively. Your business is going to have trouble. Simple idea, right? Very simple idea. This is what we call performance hierarchy. In any business which has grown to a certain level, there are people at the lower hierarchy, which we generally call the operational level. And there are people at the mid-level hierarchy, which we generally call the tactical or the management level. And we have people at the highest level, at the top level, which we call the strategic level. This is the general understanding of hierarchy: 1, 2, 3, operational, managerial, and strategic. In each of these, all the work, all the functions that actually occur are critical to the business, like the cleaners, tea makers, and owners' work. And if any of them does poorly, it's going to impact the overall business negatively. And that is what we learn here. Because to manage the cleaner well, you have to talk to the cleaner. You have to tell the cleaner what you want. You have to set the objectives. You have to tell why you've hired a cleaner. I used to do this then, but why I want you is because of this. You can give raises. You can, raise their salary. You can tell them expectations. You can help them meanwhile. You can have like a EPF or a small fund, save money on behalf of them and give it to them as a bonus. All these things. So you have to manage the operational performance by the means of various tools at your disposal, from KPIs to CSFs to strategic objectives to goals, all kinds of things. All the tools that you have, that you learn in that syllabus content of yours, you will have to think, where does it fit in? How can it help me in the operational level management? How can it help me in the management level or the tea maker, his area? And how can it actually help me in the strategic level business, in the big decisions of the business? And what happens in this performance hierarchy in the syllabus area, when you really go through the content, is you're basically learning various tools, various definitions, to help you do this very thing, to help you become a good tea stall owner, to help you become someone who can expand the business to 10,000 customers. If you want to have tea stalls, to have branches all across the country, because you are learning things about inserting tools of management at all levels, all hierarchical levels of performance, because you're someone who understands that the cleaner's job or cleaner's performance is also important. The tea maker's performance is also important, and your performance is also important. Performance at all levels within the hierarchy has to be managed, and that information, that knowledge is given to you from section 2, right, or A2, what we call performance hierarchy. And I really hope that you've got an understanding of how to absorb the content, how to really understand what you're going to learn in your syllabus whenever you go through it. Let's take a look at the third one. Performance management and control of the organization. All right, what does this mean? It says evaluate the strengths and weaknesses of alternative budgeting models, compare such techniques as fixed and flexible, rolling, activity-based, zero-based, and incremental. Evaluate different types of budget variances and how these relate to issues in planning and controlling organizations. Evaluate the increased use of non-traditional profit-based performance measures in controlling organizations, right? So let's take a look at this. What do they try to actually talk about here? Performance management and control of the organization. All right. Okay, so here the syllabus actually is playing a little bit around with the whole concept, because they should have used, instead of performance management, they should have used the term planning management, because when you really think about the bulk of the content within that section, about 70 to 80% of that content is focused on planning. It's mostly budgeting, right? So financial planning, resources planning for your company, but it should have been planning management. But we understand that, you know, part of performance is planning, part of performance is execution, part of performance is control, part of performance is, you know, review and implementation and you know, recircling back. So we understand that, so that's fine. But the bulk of the content here is at the initial phase of your business, because initially you just try to determine the goals and the objectives, what you want to be, what is your vision, what is your mission, blah blah blah. But when you actually come down right to it, when you know, stand on planet Earth and you're trying to, you know, work this whole thing out, what you realize is every single time when you work or when you try to start a business, you're working with limited resources. You don't have enough money, you don't have enough people, you don't have enough time, you don't have, you know, enough raw materials, you don't have the necessary infrastructure, you don't have the right place, you don't have the right equipment. It's not enough. And you feel that you're working with limited information, unless of course you're walking in with like a huge investment, you know, you already have your father giving you money or whatever. But other than that, you look at most successful businesses in the world, they are built with limited resources. Only then they get to a point where they accumulate enough resources and to continue on. So this particular area that is called performance management and control is really about managing the resources in a very systemic, in a very clear-cut, transparent, and a way that will ultimately allow you to have control. Because when you think about resources management, one of the biggest challenges is to go at it, to really try to, you know, manage your resources from an approach of bulk work. You know, you have a budget of $20 million. You don't think about anything. You think that this is just a pot of cash for you to use for the whole year. And this used to be the traditional sense of budgeting. You go to a marketing team at the traditional era and they ask you, look, what's your annual budget? And they tell you, look, I have 5 million rupees or $5 million or whatever. And then they just try to do everything within that. And that is the traditional sense, which you also learn here. But also there are more technical and more detailed approaches, like activity-based approaches, because you're trying to reason everything. You want, for every dollar you're going to spend, mostly it's about money. For every dollar you're going to spend, you're supposed to think about why. Why should I spend that? And is the reason I'm spending worthwhile? At this point of time to my business, is it worthwhile? Should I be spending? That's the second category. And of course, in the third level, you have the more modern, more non-traditional approaches of, there are concepts like beyond budgeting, which is like literally beyond budgeting. You move, let's say like you have a girlfriend, you had a girlfriend who broke up with you. So you're moving on, So she broke up with you, you're moving on, meaning that you're beyond her, right? So it's beyond budgeting. The idea of moving beyond traditional models, classical sense of budgeting, and to think about resources in terms of not from a pot of cash perspective, but from actually what you want to do. So, you're thinking it's not about the money, it's about the critical things that you're supposed to do and how do you do that right. And when actually you get to the point of doing, you think, okay, now let me take the resources and get this done. It's quite an effective way. And also there's a uncertainty element that's playing there, because when you think about planning, how many plans actually ever work out? It's the same with personal life. It's the same with professional life. It's the same with business. Rarely do our plans almost work out like picture perfect, right? They don't work to the dot. Either they fall short, but in most cases, if you're working hard and if you're striving hard, in most cases, the outcomes and the outputs of whatever you planned initially are at a lower level. You actually are able to achieve much greater. Like for example, you had a goal of, selling 100 cupcakes and you worked hard to hit that number. And you did everything right, and you did the marketing right, and you had the luck and the blessings and whatever, and you ultimately find yourself that even though you worked toward 100 cupcake sale, you actually sold 120. This is the general nature of business when someone is really honest, when someone does and puts all their hard work into business and does it. But ultimately, in terms of our particular section, it's about the resources management. So they use words like fixed budgeting, flexible budgeting, rolling budgeting, activity-based budgeting, zero-based budgeting, incremental budgeting, budget variances, like the whole planning, operational, advanced variances, the strategic understanding of them. They're talking about beyond budgeting. Ultimately, you're talking about the sort of the pre-execution or pre-implementation stage. So everything you're going to learn within this subsection of your chapter is going to help you as a businessman, as a business leader, as an APM student, as someone who is sitting at the top, sitting in the boardroom. It should help you really think when you sit down in a similar situation, when you really think about resources that are available. The information here should help you, or should have given you the necessary acumen to think how best to utilize the resources and what are the ways I can control the utilization of resources. What are, for example, with certain, like if you take a tool like variances, what you're basically doing is you're tracking the actual versus the plan. You're tracking. So let's say, for example, you're building a new property. Let's say you're building a new land, you bought a new land and you're expanding. So you're building a new branch for your business. So you're building a property. And of course, construction is a really expensive matter. So what you do is you have a variance system embedded in a way that tracks on a daily basis, because when you have your construction team, from them you can actually get their plan. And what is their plan? So you have their plan and you have a tracking system to compare at the end of every maybe day or maybe every week, right? Every week, what was the actual spent during that week and what was the planned amount. So if they had planned for an expenditure of 2 million and your actual expense during that week was 2.2 million, you know that you spent $200,000 extra. That's a trigger. That's to go back and to ask, why did this happen? Where did we spend this extra? And it also helps you realize the reasons and to avoid those reasons in the future. And it also helps you take countermeasures to ensure that whatever you overspend, you're trying to do something to save it from somewhere else. And it is only, I totally agree, it is only so much that you can have complete control. Because, for example, from my understanding, it's the Almighty who has the control. But the Almighty is also someone who rewards striving, who rewards hard work. And the Almighty, even though he has complete dominion over everything, even in Islam, he has never said don't plan. He has actually said plan. Do, strive, work hard. The rest I'll take care of. And that is why I said that if we strive hard for something, if we plan well, and we try to do everything, almost all the time, the results are better than we hoped for. That's the general experience that man has in life. So make sure that you absorb this content in the sense that it gives you an idea and the confidence that you're someone who is able to manage resources at the pre-implementation stage in a smart manner. That brings me to fourth one. Changes in business structure and management accounting. All right. So identify and discuss the particular information needs of organizations adopting a functional, divisional, or network form and the implications for performance management. B. Assess the changes to management accounting systems to reflect the needs of modern service-oriented businesses compared with the needs of traditional manufacturing industry. All right. C. Assess the influence of business process re-engineering on systems development and improvements in organizational performance. D. Analyze the role that performance management systems play in business integration using models like the value chain and McKinsey's 7S. Discuss how changing organization structure, culture, and strategy will influence the adoption of new performance measurement methods and techniques. Assess the need for businesses to continually refine and develop their management accounting and information systems if they are to maintain or improve their performance in an increasingly competitive global market, which is a good edit to the new syllabus update. All right. So when you think about this at a fundamental level, one of the things that you have to understand is that as a business grows, which is why they talk about, functional, divisional, network, all kinds of, there are different, modern models, because Jeff Bezos doesn't run Amazon the way Zuckerberg runs Facebook, and Zuckerberg doesn't do it the way Tim Cook runs Apple, and Tim Cook doesn't do it the way Satya Nadella runs Microsoft. All these people have their different approaches, different systems, different hierarchies, different structures. Right? That's how, some like Bezos is someone who likes to sit at the top, who has to have a significant amount of control, as opposed to someone like Zuckerberg, who actually, even though he does have a significant amount of control, who has demonopolized power and who has given significant amount of power to a lot of people across the company. So it's more of a shared power structure as opposed to something very oligarchic in a company like Amazon. So ideally, one of the things that you understand here is that every business, depending on the business, especially in the context of an exam, you know that when the examiner introduces to you the business is, there are certain lines that the examiner uses to describe the business, that it was either a new business or two brothers started it 20 years ago, now it's 1,000 people or whatever. So depending on that, you're supposed to understand what kind of structure, what kind of power dilution, power structure exists within that company. The second aspect is to ensure that the function of the business, that whatever the business does is suitable to how the business is structured. And we know many businesses that have faced problems because what they were doing did not fit the structure. So for example, perhaps one reason why we see someone like Zuckerberg who has diluted a lot of power is because in an IT company, in a modern IT company, trying to run it like a traditional manufacturing or traditional top of the hierarchy pyramid model doesn't work. For example, you realize that a government organization, right? Most government organizations that are still run in the traditional, in the classical sense, they do not have the necessary skills, or they do not have the skillful manpower, which has gaps or which leaves gaps in the structure, or they're too bureaucratic, right? That causes more problems. If you have a government organization with 80 people, but the job can actually be done with 30 people, right? It can actually be done with 30 people. You introduce a new set of systems, you bring in a little bit of automation, you use a little, if your softwares, a little more effectively, you use automation, you use maybe basic AI, and you make it very effective, very seamless. So you're basically looking at a situation where you can reprocess a business, refunction a business to be more suitable to what it does. And that's a critical skill that they actually want you to have. The next is the area of business process re-engineering. That is somewhat similar to what I spoke about earlier, which is where you are looking at complete transformation, right? You're looking at just entirely remodeling, rechanging, updating, and transforming your entire business. BPR, business process re-engineering. Even though BPR exercises have relatively failed in many occasions in the world, they have actually succeeded in some countries. In some of the, for example, in Asian economies, Japan being one of the countries that is very, very successful these kind of transformational moves. So it is definitely an area that we can consider. Business integration is another aspect where you're looking at ways and means of how you can ensure that pieces of the business, because a business is like, think of it like a set of Legos. So whatever you're going to learn here, like value chain, which Porter introduced, or McKinsey's 7S, talks about how you can segregate your business to ensure that they are interacting with the other components of the business very seamlessly. And for example, if you take a vehicle, when the different components and the systems of the vehicle are functioning well, when they are well oiled and when they are functioning well and they are interacting with the other, when the belt is well connected to the motor and when the motor is well connected to the tire, and when that entire system is well connected to your clutch system, you know that your vehicle is going to function well. And that is what a business integration aspect looks at. It tries to look at, or it tries to give you the perspective of a machine into a business to help you understand how you can, or what you need to do to perceive the business as a collection of different components that do actually have to communicate with each other effectively in order to function well. Next, it's about changing the structure and the implications of that to culture, to the people of the business, how it actually can influence, because think about it. Let's say you have your whole tea stall example that I took earlier. You have the cleaner, you have the tea maker, and you have the owner. And let's say you expand it into 5 tea stalls across the city. Now you have 5 cleaners, which is a group of people. You have 5 tea makers, which is a group of people, and you have 4 managers or 5 managers and yourself. So the managers are a different group of people. Now each of these different groups who are sitting at different levels of hierarchy, who are taking different pay grades, have different functions, different performance KPIs, different goals, different objectives, have to be managed well and effectively. And the most important thing is you cannot run your business the way you used to run it when you had one stall, because you were there and you had two people to look at, to manage. Now you have 5 stalls and you have 5 groups of, or 3 groups of individuals, the group of cleaners, the group of tea makers, and the group of managers who are sitting in 5 locations. You can't be at 5 places at the same time. You have to come up with a different system. You have to have a different structure. You cannot have them competing in a negative sense, in a way that is not contributing to the well-being of your business. You cannot have it. So all these things need to be taken into consideration, and whatever you learn here will help you do that. The particular syllabus content in this particular section, section E, is focused on ensuring that the structure, the business structure, is something that you do have the knowledge to change depending on the changes to the people that you add, changes to the culture that you make, changes to, and that the structure is responsive to the changes of performance measures that you want to implement, that the structure is responsive to the changes in goals and objectives that you have for your business. Because, for example, as a business grows, right, with time, and if the business is continuing to grow, initially it was 1 stall, now it's 5. Maybe your next target is 5 each in 10 cities. Your next target is a global expansion. You want to have 100 stalls in 3 countries in the next 10 years. Then in the next 50 years, you want to have 100 or rather 200 stalls in 10 countries or 20 countries. So each of these levels, each of these hierarchies are different. So you have to make sure that you do have the necessary skill, necessary knowledge to create a structure that is dynamic enough that can respond to business changes very effectively. And finally, it's about information systems, management accounting overall in an increasingly competitive and global market. And it really very nicely summarizes the essence of what you've looked at, because the whole chapter, component by component, what you've been looking at is ensuring that your business's structurally, that your business is very sound, that it can respond to changes, that it takes into consideration all its resources, from people to dollars, the money, the financial capital you have, to the time and the effort and the skill and the infrastructure, the movable assets, the non-current assets, everything. So that is the skill, and you have to make sure that as your business grows, as your business changes, as you're trying to expand, trying to grow, trying to introduce new things, you do have the necessary skills, necessary capabilities to say, look, let's get rid of this department. Let's introduce a new department. Let's create a team here. Let's put these people together and create them and compartmentalize that. That you have the necessary business acumen to make those decisions, to ensure that the structure is well suited to the growth of your business. And that is what you look at in this section. Finally, in section number 5, environmental, social, and governance factors, you have discussed the ways in which stakeholder groups operate and how they influence an organization and its performance measurement and performance management systems. Stakeholder groups. Social and ethical issues that may impact on strategy formulation and evaluate the role of the management accountant in the collection of data, measurement, and reporting of social and environmental factors such as are used to demonstrate a wider view of performance in reporting, for example, sustainability. Discuss and evaluate and apply environmental management accounting using, for example, life cycle costing, input-output analysis, and activity-based costing. All right. So what's this whole thing about? The entire section focuses on modern concepts, on more humane concepts. For example, traditionally, businesses were run on the basis, on the foundation of shareholder wealth maximization. And if someone asks you what's shareholder wealth, you used to say it's profits, right? It's business's profits. Or shareholder wealth is basically the collection of dividends they gain versus the capital gains they have. So it's a collection of that. However, nowadays it's not shareholder wealth, it's shareholder value. Value is a much broader, far wider concept. And value-based management, you know that it's different, and the way you look at value-based management and the way you try to report performance in such an environment is also different. You have new modes of reporting like the Global Reporting Initiative. You have new modes of information dissemination like integrated reporting, IR. You have triple bottom line reporting, which has environmental, social, and economical performance. So the whole section of that is particularly going to focus, and that's a good tendency, I would say, to look at the social aspects, the humane aspects, the governance aspects, the good governance, especially like what you learn under SBL in corporate governance, the right thing, doing the right thing. What is the right thing to do, how to execute something, and not only doing the right thing, but doing it the right way, which is also a serious factor that is considered in this particular scenario. And ultimately making sure that when you are tracking and managing performance, you don't only learn about the methods and the means of managing or tracking, measuring, reviewing performance and getting into the feedback loop of the business from a financial perspective or the traditional non-financial perspective, but you do also look at the environmental implications, the social implications, the governance implications of your business. How is your business interacting and working with the environment that it exists in? How is your business interacting, managing the relationship it has with all the kinds of non-direct stakeholder groups, from the consumer to the passerby on the pedestrian or the pedestrian or the vehicle that's just going in front of your office, whatever. It takes into consideration all of that, and the governance aspect of how your business internally, how the people who are running the business, how the leaders of your business are making decisions and running the business in a way that someone can ethically look at from a moral framework, look at and say, this business is being managed in the righteous manner. Right? So those are the areas that are being looked at, and you can't really subjectively mention these things. You have to objectively do it, and that's where key performance measures or performance indicators come in. So you are not only learning about the importance of planning, importance of control from a financial, from a management, from accounting information perspective, but also from a environmental, social, and governance perspective. So these are the main areas that you look at. Overall, it also does take a look at the whole thing, the whole section or the whole chapter or the section of the syllabus does take a look at information management overall, because throughout this entire thing, you're looking at information, a whole lot of information. It's a lot of information that is being used, that is expected for the management accountant to use effectively. So ultimately, think about this. After you learn all of these various subsections in the syllabus, you have to understand that whenever you apply one of these, whenever you try to define a particular key term for yourself in whatever business you're applying, or whenever you try to apply a particular model, maybe like SWOT or Mendelow's matrix or McKinsey's 7S, the moment you apply it, or value chain, whatever, generic strategies, whatever, you apply it, the result is information. And so, for example, if you have a jumbled set of information, let's say you apply it into SWOT, right? You apply that into SWOT. Now what has happened is that the jumbled set of data that you had has now categorically been separated into 4. And you can look at each of them and say, these are the strengths, these are the weaknesses, opportunities and threats. That's information. So that kind of information is useful. And you are expected to be someone who can actually handle that information, who can utilize that information to make better informed and well executed implementations of what? Planning, controlling, and making decisions with regard to your business. And that is the whole point of your first section, which is section number 1, strategic management accounting. As a management accountant, I know the general focus of ACCA is not management accounting, it is financial accounting, but you have consistent knowledge coming in with F2, F5, part of F9, SBL, P4 and P5 that a management accountant significantly uses, and the final nail in that hierarchy of information that you've learned across is P5. It's the most advanced paper in terms of the management accounting knowledge you have. So this chapter is extremely important. It lays the foundation that you need to make you someone who is capable of making sound strategic planning, strategic controlling, and strategic decision making related to a business. On that note, I think I've given you a good amount of clarity. Ladies and gentlemen, my dear students, I really hope that you do make good use of the video and you absorb that information. The whole purpose was to give you a correct approach, a purposeful nature, right? To give you a purpose in the way you absorb that information, in the way you get that information in. So let's do that. I wish you all the very best. And again, a gentle reminder, you know how you can reach me if you need help with the writing coaching for ACCA's APM with AZB. Good luck, ladies and gentlemen, and all the very best.